Hey, what's up, PSC 13 members? It's Navarro, head trader Penny Stocks Club 13. And in this video, I'm going to go over some question and answers again. We'll start off with that and then we'll get into the watch list. We'll also review a couple of the trades that we had today. Had a great day, guys. It was an awesome trading day. So let's see if we can continue the momentum going to close out the year on a green note. So let's get right to it. Questions that I've been asked before, either on chat, email, or just on personal one-to-one conversations with other fellow traders, and I'll give my insights to those questions, my opinion on it, and what's worked for me. So we'll take it from there, guys. So again, this is a matter and it's open to interpretation, but this is and are my suggestions and will continue to be as long as we continue trading options. So the first question I'm gonna go over right now is one that I get asked consistently, and before I do get into this question, I want to remind you that I started trading the small caps, and we're gonna kind of compare those small caps returns to options return and we'll take it from there. So the question is, what is a good percentage return for options? So for this, I'm gonna have to refer back to those small caps, guys, and we sometimes get those 20% movers, 30% movers, sometimes 100% movers, and that's great, right? But if we talk about percentage moves, as far as on a small cap, a 10% move happens almost every day, right? So that's a high probability trade that you'll probably get a 10% return, 5 to 10% return. Then you start getting into that 30%, 40% return. How often do those trades happen? Do those kind of returns happen? That's a lower probability, kind of in the mid-range. They don't happen very often. So you get those every now and then of course you get your 100% returns. How often do those happen in penny stocks? They do happen, but they happen very randomly, and it's hard for you to be in that trade for that amount of return, for that percentage return, right? It does happen, but what is the probability for you to be in that trade every single time? So that's the way you got to see the market. If you're in a trade, okay, what's the highest probability of the biggest return that I can get in this trade? So that's how we're gonna compare our trades in options to small caps. So a 25 to 50% return, or 50% returns occur about 75% of the time. They happen very often in options. So locking in profits at 25, 30, 40, 50% is always a good idea, because it happens very often. You're in a high probability trade or high probability return percentage. Let me put it that way. That's I think a better way to put it. Once you have that kind of return, it's a good idea to lock in. Regardless of what happens in the stock, it can continue moving higher, or it may not, but you have a good percentage return. And in a small cap, you might get a 25 to 50% return in a couple of days, right? It takes a while for the stock to get there. You're swing trading it, you get your 25, 30%, 40% move. If you're getting this or that kind of return in options in a matter of minutes, why not lock it in, right? Now remember that in options, time is not your friend. Time is your enemy. So locking in profits is always the best move that a trader can make. Now getting a 50 to 75% return, or 50 to 75% returns occur just about 30% of the time. They don't happen often. They do happen more often than in regular small caps trading regular stock. So again, always lock in those profits. But if you notice a probability, it went from 75% to a 30%, it decreases significantly. So we got to keep that in mind. Once you have a good percentage return over 50%, it's always good to start locking in profits, especially if you have more than one contract. And finally, your 75 to 100% or more, they occur about 15%, probably even less. So, there's a significant gap between these returns. So you got to be able to, or be aware of that. Now, and this is based on my probabilities. I don't know if there's a chart out there or something that you can Google that'll give you more accurate percentage returns, but this is on what I've gathered information from Thinkorswim. So this is what it's based on. And again, we're looking at what is the highest percentage return that options can give us. Well, the 25 to 50% return will happen often. It's a good and wise choice to lock in those kind of percentage returns. If you can do that on a consistent basis, then you'll probably be growing your account on a weekly basis. I want to say about a good 10 to 15%, guys. Now remember, a 5% increase in your total account, that's awesome. Okay, we're aiming, if you really want to be realistic, growing your account on a 5% on a weekly basis, that's huge. Think about banks. If you would have this money in a bank on a weekly basis, you're probably earning, I don't know, $1 or $2, or even with a huge bank account, right? The percentage return on a savings account is just ridiculously low in a regular savings account on a bank. So if you are using this to grow an account, if you have 5%, 10%, that's more than the bank is giving you. So any kind of percentage return is good to lock in. That's the way you gotta see the market. It's the way to grow your account. You're growing your investment, and every time you have profits, you gotta lock them in. Okay, now I do have this chart here for a specific reason. Guys, sometimes we want to max our profits, but sometimes all we need to do is just lock in a portion of the move. If we can lock in this initial portion of the move, you don't have to worry about all the other noise right here. Yeah, it continued moving higher, but if you locked in 40-50% on this move, that's awesome. You're a winner. Sometimes all you need to do is just trade a few minutes a day. You lock in your profits, and the rest of the day is yours to go and enjoy. You don't have to be trading every day. I mean, yeah, there might be some more opportunities, but there's also opportunities for you to get back that profit, right? So now if you locked it in, just move on and wait for the next trade on the following day. Next question. Why? Yeah, I get asked this a lot. Why are you not swing trading as much? Well, with penny stocks, I found it so much easier to swing trade because time wasn't against me. And since I'm trading weekly options, time is my enemy, and I hate giving back profits. So as soon as I have profits, I want to lock them in and move on, forget about it, like I said, and get on to the next trade. So, I don't see trade options often due to time decay, which is basically what I just mentioned. And with those weekly options, guys, I do believe that if I am going to swing trade, I prefer to swing trade on Mondays at the start of the weekly options, where time decay is not as bad. So again, only if the setup is favorable for a swing trade. So that's when I'm gonna swing trade, right? So there is a way for us to make some money. Now, talking about swing trading, I've also found that the best time to swing trade is when the market itself is on a gap up probability, right? When it's on a momentum run, that's great, because sometimes you get those gap ups the next morning. You want to lock in profits before the market pulls back. That gives you a great percentage return on a swing trade. So there's different factors that go into swing trading. This larger cap stocks, the mega cap stocks, because they trade with the market. Now sometimes, yes, they deviate from the market, but that's due to news or some good PR, or you name it, a combination of the both, or even more stuff that goes on with the particular stock that you're trading. So that's where I stand on swing trading options so far, and that's the reason that I don't swing trade that much, because time is your enemy, and you just want to lock in profits and don't give back any of them if possible. Okay, next question. When is it okay to average down in options? Guys, going back to the previous question, I would never recommend averaging down a decaying asset. Decaying means time is your enemy. Time decays the premium. Time decays the options value. So I would never recommend you to average down. Okay, averaging down in options is not a good strategy. You just have to take that as it is, for what it is, and not average down. You just gotta bite the bullet and take the loss sometimes. However, there are always exceptions. Just like anything in life, there's always exceptions, but those come very rare. The setup has to be there for you to average down. You have to understand where demand is, where it can go, but that requires a lot of discipline and a lot of skill. So yes, there are exceptions. However, we're not going to talk about those exceptions right now. I just do want to put it out there for you to understand. But again, averaging down is not a good strategy in options, especially weekly options. Okay, and here's an example of why it's not a good idea to average down, guys. And this is just I just try to look for something that will help me drive the point across. So let's say we thought this one was going up. Of course, we've been looking at it, but let's say you entered here. This was your initial entry, right? You let it drop all the way down and you buy some more down here. You average down, correct? So that does not mean that your actual average price is here. Your average price is now in between your entry and your new add, right? Where you added to average down. So now the price is still above the current stock's price. So that means you still need time, and time is your enemy. And even if it comes back to your average, you might still be down because time is decaying your asset or your premium. Time is decaying your premium. So the following day, you already lost on time value. The premium is down, and then if it can still break your price. It can even go up all the way to your original entry, and you could still be down due to time decay. That's why averaging down, guys, is never recommended, because time will kill your premium. Alright, so basically in a nutshell, that's why averaging down is not recommended, guys. So I hope that those questions help you out, and that's my opinion on them. So with that said, guys, let's go ahead and move on to the watch list. So here's the SPY. I talked about it in the previous video. I told you that it might break out. We had this pattern here, this ascending wedge, and it broke out, guys. It might continue, it might gap up, but I do believe, remember that the SPY, the market itself, tends to fill the gap. So if it does gap up, wait. You might want to expect that gap fill to the downside, fill the gap, and possibly even consolidate here. We'll see what happens, but in an ideal scenario, what I would like is for it to just come down, test the trend line of support, and then continue moving higher. That would be ideal. Again, we cannot predict what the market is going to do, but that's what's going on in the overall market so far. So let's get down to the watch list, guys. I'm going to start with PayPal, an oversold pattern. And I do have some technicals here already. I'm going to zoom in so that we can see it a little better. So we do see this upper trend line right now. It's trading above the 9 EMA, which is good. And it closed right above the 20 EMA. I would love a little pullback and then a move higher, right? I do have this previous rejection. That would be somewhere where we would want to take profit. Okay, but we do have this other rejection here. So an entry right around the buy zone, the demand zone here, I would say to take profits around that 195.20, 195.20 level, somewhere there, close to it. And that would be a place to take profits. Again, it might continue moving higher. We look at these two bars and we get a scale, we get a true range here. let me get the right tool here. So let's just go with this one, the most recent biggest price action bar. Let's activate that line that I drew, and let's say the entry is right here at this demand zone, right? This current demand zone. Then that would coincide with the previous rejection. So again, anywhere here would be your take profit zone if this works out the way we expect it to. What is another possible scenario, guys? We got the 9 EMA. So for what we know is that sometimes they tend to break out of that upper trend line, and then they come back down, find support lower, and then continue moving higher. And I can give you a perfect example, one we traded today, UPS, which was part of the watch list for today. So we see that attempted breakout, we see it come back lower, and then we see that breakout, right? So we have the first attempt, and then on the second attempt they continue moving higher. So that's something that we might want to watch out for on PYPL, which is PayPal. Right now there's that little attempt, we might have that pullback, and then that continuation later on this week. But anyways, we have a plan for it, and we are going to be ready for either scenario. Moving on to the next one, LCID, guys. This one we traded many times. It's been one of our go-to stocks most of the time. And right now, what do I see here? Well, I know I have a lot of technicals here, old ones that are not valid anymore. Let me just get rid of them really quick. And so what do I see here? Well, we have this big push. Let me go ahead. We have this big push. We have this cup right here, this huge cup. And now it's kind of wanting to form that little handle, right? So hopefully we get that cup and handle action going. But not only that, let's just look at this particular pattern right here, the most recent price action in the past couple of months. So I'm gonna get this oval here. We're gonna see that support there. That's one, that's two. So we got major support here, major support at that 3570 level, guys. It's been just major support. We got a triple bottom so far, right? We had good decent price action, slight increasing volume. So now hopefully we can get that extension higher. Profit taking, guys, would be at this previous rejection. That's why I had a price level line right at 42. That would be a good percentage gain on the options. Believe me, that's the move we're looking for if it continues going higher. Again, just like I mentioned on the Q&A, sometimes we just want to catch a portion of the move. We don't know, and we cannot predict how much it's gonna move, but we can predict a direction. We can do the trend trade. We're gonna follow this trend as it's coming up. If this triple bottom is true, then we can enter at either the break of the 50 EMA, which is at around 39.50, or we can just kind of, well, again, it all depends on the open. So let's go ahead and look a little closer. Let me just get into more detail here. 5-day 15-minute, you can see it's kind of pulling back already. I hope it opens up near the 39 level. Now another way we can enter this is today's high, which is right at the trend line. So tomorrow that 39 level might be above this trend line, this upper trend line. That could be an entry for a breakout out of this pattern, guys. So that's what we're looking for. Again, it all depends on how this stock opens tomorrow and if it's still in play for a good trade opportunity on a good percentage return. That's LCID. Next one, the LTR, Dollar Tree. So this one has a good momentum trade. It's got good upward trend right now. So let's zoom into current action. Right now, increasing volume, not too much price action, but there is a slight increase in volume. And we've got this 20 EMA right now holding support, bouncing off of it. So we want to see that extension, right? Where can we take profits? Well, there's this little gap fill right here. I want to say the top of this breakdown candle would be a good profit taking, or maybe this current resistance. Again, we're just looking for a quick return here. So there's your sell zone if this works out the way we plan it to. So entry, we go to the 1 day 3 minute, we can get an entry at today's high a day. If it opens higher, we want it to come down and test the support level. So we would want that demand zone right there, right, that supply zone to become a demand zone. So we would want this price or demand zone here. If it opens higher again, come back down, test this demand zone. We want to see buyers come in, and as it's pulling away, we want to enter the trade and get that momentum run going. So hopefully the LTR again has a good setup, good probability, and we'll see how and if we trade it, if it gives us that opportunity. The last one on the list, but not the only 4 stocks that we can trade, there's plenty more, is Apple, guys. Apple has been the strongest stock in the past 3-4 months, in my opinion. It's just been on a tear, and this one has great returns with the options. So let me kind of clear this up really quick. Okay, so 20 EMA, bounced off the 50 EMA, bounced off the 20, bounced off near the 20, and then we got the 20 again holding support, and it's continuing higher, guys. This one, if it works out, my ideal trade would be this line here, this 179 level. If we get that pullback, like I told you, depending also with the market, Apple tends to trade with the market. It's the heaviest component in the SPY. So if it comes back down here, holds that support, and then continues moving higher, I would expect the move to 185, 184, 185, somewhere here for new highs, new all-time highs. And after that, it might pull back again, or it might just continue going. We don't know exactly what's going to happen, but my idea here is for a pullback entry to the 179 level, 178, 179, and if it holds that level, if demand comes in, then we can ride it to new all-time highs. That's my idea in Apple, so we'll keep it in watch. What else is relative to Apple? Microsoft, same type of pattern here, guys. We love a pullback and then a continuation play. We do have this double bottom here, so that is great. I know last week I didn't get to trade, so this would have been an entry and then that continuation. But again, this is where we're at with Microsoft. And let's go over some of today's trades, guys. UPS was on the watch list. This one worked out well for us for about a 40% return on this little move that it made here. We traded this breakout again. I talked about it in comparison to PayPal a little while ago. Broke out, failed breakout, came back down, and now it's breaking now. Now this is a successful breakout. Can it continue moving higher? Absolutely, guys. Or it may not, but you've got that breakout out of this current trend, this little upper trend line, this descending line, which is good. You know, we at least got something out of it today. So we had the entry here at the 20 EMA bounce, and I sold some here at 105, sold here at 103, I believe, and I was out of this trade. And now if it continues going tomorrow, we can also trade it for a continued run on UPS. The other one we traded today, AMD flag pattern continued going, profit taking, and this one also has an opportunity to make new all-time highs. We did see this pattern here, as I mentioned in yesterday's video, and it broke out of it. So again, this one can continue moving higher. It's got a good momentum run. It's at an upward trend. You can see that upward trend, pullback, and continuation. So that's AMD. Ford traded today again. Been trading this one quite a bit, and again, current trend. You got this line here, you got the little breakout. Can we see a continuation, possibly to 22? Absolutely. I am holding a couple of contracts on this one for continuation. We'll see how it opens. Again, just remember that Ford, for some reason, opens up lower, kind of gives back all the gains. So I'll be ready for that, in case that happens in the morning. But I would love to see a 2-day continuation, something like this, It hasn't done it in a while. I think it's due for it, and I would love to see that continuation. Profit taking at 21.50, which is the all-time high here, and sell the last one at 22 if it gets there. So that's what we're looking for in F. Nike, another one that we traded today for profit, and this one was just a beautiful trade off of that demand zone like I spoke about in yesterday's video. It came down, we bought it, moved up, and now guys, this is a perfect setup for a swing trade. They take some profits, but I held some on my smaller account, so now we're looking for that kind of candle. Hopefully it'll give it to us. And looking back at previous history, if you see here, if you notice here, it does tend to come back in. It's probably just that morning profit taking from everybody that traded it from down here, and then it continues moving higher. So don't panic if it comes back down in the morning and then continues going higher. You can expect that kind of move. Again, the ideal scenario would be just a gap and go, but I mean, we don't know what's going to happen. Again, just that curling action that I always like in any particular stock. This setup is so good for swing trading, so we're hoping that we're looking for this move. We're not hoping, we have the setup, we just need it to work, right? So this is not a hope, I hope it works. This is a high probability setup. We entered at a very good entry, and now we're looking for that setup to come through for us, which most of the time it's done it for us. That has been our money maker. So Nike, and I believe we have one more, another swing trade. The retailers, Macy's, guys, had a good one, and I believe this one might do that up to this resistance level here. If that works out, you gotta still watch out for that 50 EMA, that 20 EMA for resistance. But again, we'll keep it on watch. We'll see what it does. In any case, my position sizing on this one was just a moderate one, a starter, so I'll be fine with whatever happens. And then we'll look at the same sector here, WMT, Walmart. So you can see when it kind of sells off, comes back up, comes back down, makes a higher low, and then continues going. So we can see the same thing here, right? Comes down, back up, makes a higher low, and then it continues going. So if you look at this section here, this is what we call market symmetry, right? So that's what you call market symmetry, when you have the same type of pattern develop more than once. Okay, you can even see that here. So it's something that Walmart does often, and it's something we can look for. It does gap up sometimes, so I mean, we'll see if it either gaps up tomorrow, or if tomorrow we buy and then gaps up the following day. So we got to keep it on watch. And Target is doing that little fishhook pattern, guys, but I didn't want to trade this one because this 9 EMA, remember, this is your momentum trend line, your momentum EMA, and the momentum right now in Target, guys, is not in the proper direction, right? It's going south. It's just selling off. So the momentum can be the rejection of the 20 EMA and just a continued sell off in TGT. So that's the reason I kind of feared it, and I didn't want to go into it, but I did like this little fishhook pattern, and we'll see what TGT does tomorrow. Guys, that is all I have for you. Hope you enjoyed the video. Catch you in the next one.